Hey, welcome back. It's JWalter here. For those of you who follow my YouTube channel, you know that I post the latest housing market stats so you can make a more informed decision on whether or not you should buy or sell a house. Or if you're just interested in housing market stats, just like I am, then you follow the channel, right? However, when people are making that decision about whether or not they should buy or sell a house, it's largely an emotional decision. So consumer confidence in the general economy and also the housing market is also a big factor in when people are making this decision. So the focus of today's video is to go over consumer confidence because a new report was just released yesterday. So that's the topic of today's video. So let's go ahead and dive right into the video. And of course, as always, if you get any value out of this video, then please hit the like button. I greatly appreciate that. And also, consider subscribing as well. So here's an article I found on marketwatch.com. They say that US consumer confidence rises for the first time in 2022, but inflation and Ukraine still are big worries. So I'm gonna be going over at a high level what this report went over, and also I'm going to be sharing the actual report itself as well. And also some general concerns about consumers have right now, especially regarding inflation and of course rates as well, or mortgage rates I should say. A survey of consumer confidence rose to 107.2 in March, an increase for the first time in 2022. Americans are still uneasy about high inflation and the economic fallout from the war in Ukraine though. And the forecast for this survey was actually 107.5 in March. So we actually did not meet the expectations of the forecast. So it came in slightly below their forecast. So Americans are worried about inflation. That's a big headline here. Here's the consumer confidence index over the past really 2 years really. As you can see here, the confidence levels actually have been decreasing really ever since the summer months of 2021. In June, it was 128.9, but now we're only at 107.2. So we've been seeing this downward trend in consumer confidence in the US right now, and that could potentially be a big problem, especially if that continues to decrease, right? And the reason for this decrease last fall is because of the Delta and Omicron viral outbreaks, and also now we have rising inflation, and of course the war in Ukraine, which is adding to this decrease in consumer confidence right now. So consumers predict inflation will increase 7.9% in the next 12 months, the highest level ever recorded in this survey. Of course, this is a big problem. In my personal opinion, I believe the Federal Reserve should have raised rates months ago to combat inflation. Now they're behind the ball on it. So we'll have to see if they are going to be more aggressive on the rate hikes in their meetings to come this year. More on that here just a little bit. But what has kept the index from plunging even further is a strong labor market. Workers have leverage over companies, resulting in more people switching jobs and earning higher pay. The US economy is still expanding at a steady pace. However, there are headwinds that are growing. The Federal Reserve raised interest rates for the first time in 4 years in their March meeting to combat high inflation. But like I said, I think they're way behind on the ball on this because inflation is at 40-year highs. Fresh COVID lockdowns in China and the Russian attack on the Ukraine, meanwhile, threaten to further disrupt global supply chains and worsen shortages in the US that have sparked a surge in inflation. So this could cause inflation to rise further, and that would put more pressure on the Federal Reserve to increase rates further. And looking ahead, the Fed embarks on what appears likely to be an extended rate hike cycle. More on that here in just a little bit. Consumers are increasingly wary of the outlook of the economy in the later half of the year and into 2023. And one of the questions they have on this survey is, do you plan to buy a house within the next 6 months? I found this to be very interesting because this actually goes back to 1979 about respondents planning to buy a house. So as you can see here, ever since really 2011, that index or that response for people wanting to buy a house in the next 6 months has been increasing. However, more recently has been starting to decrease. And here's what the National Association of Home Builders reported. The Conference Board, that's the company or the organization that does this survey, also reported the share of respondents planning to buy a home within 6 months. The share of respondents planning to buy a home stayed unchanged at 5.8% in March, the lowest level since November. The share of respondents planning to buy a newly constructed home remained at 0.6%, while for those who plan to buy an existing home fell to 2.3%. I'm going to be very curious to see what the results are going to be in the next few months regarding this survey, regarding if people plan to buy a house, because of course mortgage rates have been spiking greatly. More on that here in just a little bit. In any case, here's the actual report on the Conference Board's website for U.S. consumer confidence. So this survey reflects prevailing business conditions and likely developments for the months ahead. This monthly report details consumer attitudes, buyer intentions, vacation plans, and consumer expectations for inflation, stock prices, and interest rates. So this index actually increased slightly in March after a decrease in February and also a decrease in January as well. So here's consumers' appraisal of current business conditions that actually improved in March. So about 20% of consumers said business conditions were good. That's actually up from 17.6%. In contrast, 22% of the consumers said business conditions were bad. That was down from 25.1%. Consumers' assessment of the labor market also improved in March. 57% of consumers said jobs were plentiful, and that was up from 53.5%, a new historical high. Only 9.8% of consumers said jobs are hard to get, down from 12%. Honestly, when I'm driving around town in Sacramento, I see a ton of now hiring signs. So it makes sense that there's very few people who say that it's very hard to get a job right now. In my opinion, it seems like there's a lot of jobs out there and a lot of employers are trying to fill those jobs. Consumers' optimism about the short-term business conditions outlook declined in March. 18.7% of consumers expect business conditions will improve. That was down from 21%. About 24% said that business conditions will worsen. Meanwhile, consumers were mixed on short-term financial prospects. So about 15% expect their incomes to increase, whereas about 13.7% expect their incomes will decrease. And by the way, this consumer confidence index is based on an online sample. So based on this survey, it appears that inflation is a main concern among consumers in the US. So let's have a look at mortgage rates right now, because obviously if inflation continues to increase, that's going to put more pressure on the Federal Reserve to increase the federal funds rate, which could cause mortgage rates to increase further, right? So at the time of this video, which is March 30th, mortgage rates right now are averaging 4.79%. That's an increase of 1.34% compared to 1 year ago. However, mortgage rates have been decreasing for 2 straight days. They actually peaked at 4.95%. That's the highest levels we've seen since November of 2018. Meanwhile, the yield on the 10-year US Treasury note, which is tied loosely to mortgage rates, when the yield increases, so can mortgage rates. The yield right now is 2.37%. Compared to 1 year ago, that yield was approximately 1.7%. So the yield has been increasing greatly, and that of course is why, or one reason why, mortgage rates have been increasing. In regards to mortgage rates, I found a very interesting article that I want to share with you guys, and this is on the mortgagereports.com. They asked industry experts about what their expectations were for mortgage rates in April 2022, and also for the remainder of the year as well. This was just published on March 28th of this year. So will mortgage rates go down in April? Mortgage rates grew significantly to begin 2022, surging over 100 basis points, that's 1%, through the first quarter. With inflation at 40-year highs, the pandemic's economic impact subsiding, and the Federal Reserve outlining its 2022 policy plan, more growth could be on the way for mortgage rates. So Doug Duncan, who's a chief economist at Fannie Mae, is predicting that rates will rise in April 2022. So the senior economist at the National Association of Realtors also predicts that rates will increase in April 2022. And she says the Federal Reserve indicated 6 more interest rate increases by the end of the year. So in other words, the Fed has signaled that they may increase the federal funds rate in each of their meetings this year. And that could cause, of course, mortgage rates to increase further. She also is forecasting mortgage rates to average around 4.4% at the end of the year. I'm really curious what mortgage rates will be like at the end of the year, though, because as you guys all know, mortgage rates right now are around 4.79%. So we'll have to see what the average will be in 2022. It seems like it's going to be much higher than these predictions, but we'll have to see. Meanwhile, the deputy chief economist at CoreLogic says rates will vary. She's the only one that actually said that rates will vary. It all depends on a multitude of factors. Joel Kahn, who's associate vice president at the Mortgage Bankers Association, or the MBA, also states that mortgage rates will rise. Our economic outlook reflects the potential for slowing but still stable economic growth and a healthy job market. The economy remains strong, but a renewed bout of supply chain constraints and disruptions stemming from the war in Ukraine is likely to push inflation higher, putting more pressure on the Federal Reserve to potentially increase rates further as well, right? The MBA forecasts that mortgage rates will rise further over the next year to around 4.5%. The deputy chief economist at First American is also predicting that rates will rise in this April. Mortgage rates are notoriously difficult to forecast, though, because they are tied to the wider economy and global geopolitical events. This is one reason why I generally do not speculate on this channel, because there's so many things that affect our economy and also our housing market that are beyond our control. So for example, how many people will list their house for sale? How high will mortgage rates go to? It's anyone's guess, so it's very challenging to predict what will happen in the short term because all these uncertainties. She says, but the general expectation is that mortgage rates are trending upwards and have already increased based on the expectation of the Fed tightening monetary policy this year. The deputy chief economist at Redfin is also predicting rates to increase to perhaps 4.4% by the end of April. We'll have to see that because rates will have to decrease in order to get to 4.4% in April this year. The likely picture is that we won't see rates under 4% anymore. I agree with him regarding this though, because I don't believe that rates will go below 4% for a very, very long time. In addition, the executive vice president at Realty Track predicts rates will rise, inflation is unlikely to come down, and we'll also see more supply chain disruption due to widespread COVID outbreak in China and also the invasion in Ukraine. So I hope you got a lot of value out of today's video. If you did, please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. Hope you have an awesome day and look forward to seeing you on the next video.